Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, as of yesterday, we've seen that the Nifty managed to cross the key resistance level of 24,350 and also managed to reach a one-month high as markets extended their recovery for the third consecutive session as of yesterday. It was the financials that outperformed clearly, with the Nifty Bank rising over 1%, and especially HDFC and Axis Bank were the top gainers on the Nifty as well. We've also seen Adani Group stocks also continue their recovery. They were among the top gainers as well, with Adani Ports rising almost 6% and Adani Enterprises also gaining about 3% in trade. Now, as we move forward to the mid of the week now, there are a lot of global cues that we need to keep an eye out on. Even though the Wall Street managed to eke out some record highs as far as the S&P 500 is concerned, it's the Asia markets that are mixed in the morning trade, and that's after the late night K-drama really unfolded in South Korea. We did see South Korea President Yoon impose martial law. This was as a move to accuse the opposition of anti-state activities that were trying to destabilize the government. But of course, just a few hours later, we did see this, move of the president also getting revoked as well. In fact, within hours, Yoon reversed the decision following a strong rebuke in the National Assembly, widespread protests as well. So that's something that we will now keep an eye out on as to how the geopolitical tensions will, go across Asia. And of course, as far as the domestic markets are concerned, all eyes will soon be on how the RBI will move on the rate cut. So those are the kind of setups that we need to look at this morning. Good morning to all our viewers and good morning, Shail.
Good morning, ladies and gentlemen. Smack in the middle of the week, Wednesday it is for you, and what is back in strength is risk on trade. So buy the dip is back in fashion. And how? While both Nifty and Bank Nifty are way below their all-time highs, but what is at a record peak? Hold your breath, ladies and gentlemen. HDFC Bank. It is the highest weighted counter on the Nifty, about 12 percentage points weighting as far as Nifty is concerned, 12.67. And when you look at the Bank Nifty, HDFC Bank has a weightage of 39%. Now, this is a benchmark of quality as far as balance sheets are concerned. It is a benchmark of creating long-term wealth for shareholders who've been with it for 20 years, 10 years, 15 years, you name the period. And this is the bank which is leading the assault on bears as far as Dalal Street is concerned. Keep an eye out on HDFC Bank. But let us analyze what is back with us. Well, the most important thing is that after 3 days of continuous rally and positive advance decline ratios, you are possibly going to look at some kind of consolidation above the 50-day EMA as far as Nifty is concerned. A 4-week high on the index, we are at 24,450. Remember, the intraday high was 24,480 odd as far as the Nifty is concerned on Tuesday. Now, more strength is seen on put writers, which are bulls on the option trade, and there is considerable weakness when you see call writing at 24,200, 24,300, and now at 24,400. All those places have been vacated by bears and now they are back in bull custody. What is also important is that the net short positions of foreign institutionals in the option space for index has reduced dramatically. It is below 1 lakh contracts, and once it hits below 80,000, you will see a further uptick. More importantly, Sakshi will give you the data, but I'll give you the good news. Foreign institutional investors are back in buying mode. The numbers will be given by Sakshi. So all put together, ladies and gentlemen, is a good positive picture for the index, for the market as far as today's sentiment is concerned. And one more thing, one more Asian competitor falls on the wayside. With this coup that has, with this small enactment of the martial law, which has been again taken back in South Korea, the spotlight will be on India, both for FIIs and both for FDIs. Investing in South Korea will now become a little more unattractive compared with India. This is again a long-term positive for all those multinationals who are looking to have a toehold. Prefer India over South Korea as well. So Bangladesh, Sri Lanka, and of course now South Korea are slowly but surely falling down the ladder as far as the attractiveness of putting in factories, putting in money is concerned, and all that money is likely to come into India. Now, what are the things that you need to watch out? Nifty is consolidating around 2200-day DMA, which is a big plus. FIIs are back in action. Net short positions are declining. India is becoming attractive. HDFC Bank is at a record high, and more importantly, the government has now kick-started capex. The first of the block are defense counters. 22,800 crores worth of fresh purchases for advanced light helicopters, for Sukhoi engines will benefit HAL. Light attack watercraft and many other things for the Navy are being in the pipeline. That has also been approved. Therefore, Cochin Shipyard, therefore Mazagon Dock, and more importantly Garden Reach, and of course warfare suits with an electronic touch, and therefore BEL. So all 5 counters will be in top shape. There is an excellent move coming into PSU banks ahead of the MPC, which starts today, and of course Friday is where the RBI will announce its credit policy, while interest rates are likely to be held, but there is most likely a cut in CRR in the pipeline. So PSU banks, realty stocks, auto stocks, defense counters is all that I am looking at. And let's get back to Sakshi. She will give you the good news on FII numbers. Sakshi.
Absolutely, Shail, that's right. They have turned buyers of the Indian equities after 3 sessions of selling, but 3,664 crores has been poured in. So this actually gives us a hint that probably they are now looking at India with a more favorable eye at this point in time. The domestic institutional investors also were buyers, and in fact we did see about 250 odd crore rupees kind of a buying figure from them. But let's look at the kind of move that we've been seeing across the board. In the US, for instance, the S&P 500 and the Nasdaq eked out record highs on Tuesday. This was tech-related shares that extended their recent gains as investors awaited their further jobs-related data. Dow finished, however, slightly lower in trade, just by 0.1% lower in trade. But following this, what we've seen in the Asian markets is that they slipped largely in the early trading action. Like we pointed out, it was the South Korea political turmoil that triggered this kind of a sell-off. So the Nikkei was down 0.4%, Kospi down by 2%. Hang Seng just managed to pull up about 0.1% in trade, but China was also down in trade by 0.1%. The GIFT Nifty is now indicating a muted start at 24,539 odd levels. Let's see how this really shapes up. Remember, the Treasury 10-year yields have edged higher to 4.23%, and the US dollar has recovered from a 3-week low as well. So we'll keep an eye out on all of those factors. That will be important to watch. Let's also look at how some of the stocks will be in focus in trade today. Keep an eye out on the banking stocks, viewers. This is after the Lok Sabha has approved the Banking Laws Amendment Bill 2024 as of Tuesday. It was tabled by Union Finance Minister Nirmala Sitharaman that proposes 19 amendments to the banking laws, including the Reserve Bank of India. So we'll see how that one shapes up. Apart from this, we'll keep an eye out on HUL from the FMCG space, and this is because the company's Vim brand, which is a leader in the market in the dishwashing space, is now expected to cross 3,000 crores mark in sales soon. Let's also keep an eye out on Adani Group stocks, especially Adani Energy, where the company has been declared as the preferred bidder for transmission system project housed under Rajasthan Part 1 power transmission, as per some of the news reports that have come in this morning. The project is worth about 25,000 crores, reportedly will be AESL's first largest order win ever once formally awarded. So we'll keep an eye out on that buzz getting confirmed now. Swiggy will be in focus. The company has marginally narrowed its consolidated net loss in the second quarter of FY25 to 625.5 crores. This is from 657 odd crore rupees a year ago. But sequentially, the loss has increased, and the firm has reported a loss of 611 crore rupees in Q1. So from that, it has risen to 625.5 crores. We'll keep an eye out on Honasa Consumer, also from the new age tech space. because Varun Alagh, the co-founder of Honasa, has now increased his stake in the company to 31.93% with a 4.5 crores investment. Both the co-founders together, Varun and Ghazal Alagh, hold a combined 35% stake in the firm. We'll also keep an eye out on PB Fintech, the parent company of Policy Bazaar. The board of directors have now given approval to incorporate healthcare subsidiary that will undertake healthcare and allied services. The company will offer health services through proposed subsidiary PB Healthcare. We'll also keep an eye out on JP Associates. Remember, the company is in focus again today after reports are indicating that the debt-laden company has offered 16,000 crore rupees to lenders as a settlement offer in a bid to avoid bankruptcy right there. We'll keep an eye out on how this one also shapes up. Reliance Power also will be in focus. Here, there's some good news that Solar Energy Corporation has withdrawn the order banning the company from participating in all the future tenders for 3 years. This means that the company and its units, except for Reliance New BESS, are now eligible to participate in all SECI tenders going forward. Keynes Tech will be in focus. The company has acquired a 54% stake in Austria-based Sensonic, which is a provider of distributing acoustic sensing solutions to monitor railway infrastructure. We'll keep an eye out on that too. From the railway space, we'll also keep an eye out on RVNL. The company has received an order worth 187 odd crore rupees from the East Central Railways. So those are the key stocks that we can keep an eye out on. Share.
Ladies and gentlemen, 8:46 p.m. We will shortly be joined by market experts, Mr. Avinash Gorakshakar, Head of Research at Profit Path Securities, and a little later, Osho Krishnan, Senior Research Analyst for Technicals and Derivatives at Angel One. I believe Avinash has joined us. A very good morning to you, Avinash, and a very warm welcome. Wednesday it is. 3 consecutive days of strong action, record high on HDFC Bank, are in buy mode. What is the sentiment on the Lal Street?
Yeah, good morning, Shail. I think it seems, that FIs are back in the equity market. And I think the South Korean news, which you mentioned, I think is also going to be a big, sentiment booster, because that is going to make India very attractive amongst the Asia Pac.
Yes.
I think that is going to be a trigger which I think, nobody was expecting. So I think this is something which is positive, medium to long term for the Indian markets. As far as the market mood is concerned, I think clearly, I think now I think what comes out in the RBI policy is going to be the near-term trigger. Although markets are not expecting any decisive action this time, I think what commentary comes out of the RBI governor is going to be very critical, because clearly, with inflation still at elevated levels, what kind of commentary and what kind of message the RBI governor wants to give out is very crucial, because my sense is that industry is hoping for a rate cut, at least not this policy, but at least the forthcoming policy. Growth has suffered in the first and the second quarter. Hopefully, the third quarter should be good. I think something on food inflation could be commented, and I think that is something very crucial, to ensure that we have got a very healthy level of inflation going downwards. So I think net, I think it's going to be a stock specific, approach in the markets, Shell, for some time. We've seen a lot of activity, as you rightly mentioned, in sectors like capital goods, real estate, automotive companies, domestic cement companies. So I think these are, bright spots in the market where some lot of money could get rotated. I would believe that even IT is now again coming back in action, as everybody is aware that, on 20th January next year, we'll have Donald Trump assuming office. So I think the IT sector is also now looking pretty attractive, from a longer term perspective, because a lot of uncertainty would get cleared. So I think net, IT, capital goods, real estate, typically, even the agrochemical pack like agrochemicals, consumer durables and cement. I think these could be bright spots which you have been telling our investors to actually look in, at this point of time. I think it's going to be stock specific approach. The index is unlikely to show any major gains or downside. I think we could see a little bit of consolidation, after yesterday's move.
Very good morning to you, Avinashi, and good to have you with us. Talk to us about the banks as well. We are seeing renewed action come back on the banks entirely, especially HDFC Bank that's climbed to record high levels now. So the focus is back. Now, one was really hoping that the economy is going to be doing extremely well, and the FII is now with them coming back. This is the space that probably should garner more strength. But at the same time, we are also looking at the GDP figures, which are inching, pointing out now. What is your approach towards the banking space?
I think banking looks pretty attractive. See, because if the economy has to grow, we have to grow at a higher GDP growth rate. Then banking cannot be ignored. And I think in terms of valuation comfort, HDFC Bank has been a strong underperformer. But I think looking at the fact that recently the bank had a conference call with analysts, and they clearly spelled out their strategy, their growth plans, plus the value unlocking for their one of their subsidiary which is going to go public, that is SDP Financial. So I would believe that the markets are now looking at a stronger quarter, specifically the third quarter, which is the pickup quarter for banks. So SDFC Bank, if it holds on to, let's say, 1800 odd levels, then I think you could don't be surprised if it even crosses 2000. And most importantly, it's a well-established bank, a very strong franchise. Other PSU banks which we like are basically banks like Bank of Baroda, Canara Bank, typically even SBI, at lower levels, because we feel that most of the risk is out, and these valuations which you are seeing now are definitely looking attractive if you look at the next 6 to 12 months. I think credit growth has of course come off, but if you look at the deposit kind of challenge, PSU banks are well positioned, with CASA ratios of almost 45 to 50%. This is one advantage which the PSU banks have got, and I think hopefully if credit growth picks up and the capex which the government has announced clearly materializes, then I think there's going to be a lot of re-rating in these banks. So I think we got to put in a little more time and patiently wait, because banks have underperformed for a long time. But I think over the next 6 to 12 months, it could be a good reason to allocate some money, this sector as of now.
Let's continue this conversation on banks as also RBI's credit policy, which will be upon us on Friday. The MPC meet begins, and more importantly, ladies and gentlemen, unless Dr. Shaktikanta Das, the present governor of RBI, gets an extension, this will be his last MPC and policy. Avinash, there is this buzz in the market that the rate cut, which you very rightly say, will now be preponed to the February policy instead of April, is of course in the pipeline. But what is also a possibility is that a CRR cut might come in to inject fresh liquidity into an economy that is slowing, and of course the need for bank credit. What is your view on the CRR cut? Is it likely?
Yeah, I think my guess is that it all depends on what is the kind of liquidity in the system. According to me, I think if at all a CRR cut is announced, I think it will give some relief, to the corporates. Most importantly, I think interest rates are something which are still elevated. Inflation is still high. So I think unlike maybe a direct rate cut, maybe a CRR cut could come in, and that could be a temporary kind of a booster for the markets. But I think the bigger issue is what is the commentary on global, commodities, specifically crude oil prices, which again have picked up by about 2-3%. And I think if there is no major geopolitical risk, then I think that could possibly be a good sentimental booster from the RBI. But I think on inflation, specifically food inflation, is something which I think most of the market would like to hear what is the thought process of the governor. Inflation is still elevated, Shell. So I don't think this point would be ignored by the market. So I think as long as inflation is high, and now with the coming in that the government may think of increasing GST on a number of items despite growth having suffered, is something which the markets are little skeptical and worried about. Because at this point of time, if GST gets increased on basic to luxury items, then I think that's going to be a dampener for the market. So I think my sense is that we'll have to wait and watch how the RBI governor spells out the inflation outlook and the interest cut kind of decision. So as of now, it will be a neutral call. But I think next 3 to 4 months are going to be quite crucial.
Okay, got that. Avinash, sir, another space that I wanted to draw your attention is the entire defense space right there. Remember, the center has cleared 5 acquisition deals to improve India's defense preparedness right there. 22,000 odd crore rupees nearly is the kind of proposals that are going to be augmenting defense preparedness for India. What does it mean for the entire sector now? We do know a lot of stocks within this sector have taken a sharp beating. They have slipped 30-40% from their all-time highs as well. Although over the last 10 days, 15 days or so, we have seen some amount of bounce return across the board, be it shipbuilders or the frontline stocks like HAL and BL. Do you think the worst is behind? Is this the right time to again start forward-looking as far as the defense sector and the outlook is concerned? And should one start nibbling into these stocks now?
Yeah, I think defense is a multi-year story. So, I think one cannot expect a very straight and a significant alpha now from these levels. But I think these companies have now clearly become compounders. Like you mentioned about Bharat Electronics, Hindustan Aeronautics. Now,
Yeah.
these are companies, which are sitting on very strong order books, at least for the next 2 to 3 years. So, my sense is that, investors should use this opportunity to actually accumulate these stocks in a small fashion, maybe a SIP approach because visibility of business is assured, and I think government is very keen that more and more defense items gets manufactured in India, and that is going to actually help a lot of these frontline defense companies, a lot of ancillary companies which actually supply to these large defense companies. So I think in terms of shipbuilding, the area seems to be quite promising. Like yesterday, I was reading Cochin Shipyard has got 1,000 crore plus order. Typically, that also is a big booster shot for them. At the end of the day, Bharat Electronics again is sitting on a very strong order book, a debt-free balance sheet. So I think, if somebody has a longer term call, say 12 to 18 months, I think this could be a safe space to put money. But yes, I think you need to give in some more time because, 2, 3 years back, valuations were available very, very cheap. But today, I think these stocks are not valued cheaply. So I think there's a price to be paid today. So I think we could at best look at the 12, 18 months and I think do a small kind of nimbling even at the current levels, but keeping a time frame of at least 12, 18 months.
Right. This is the view that is coming in on defense. The other theme, Avinash, in the market is the depreciation of the rupee to a record low. And of course, in that context, the decent gains that we are seeing in pharma and IT stocks. What would be your favorites? Do you think IT is overstretched or is there still room for improvement?
So I think Shell IT is definitely well positioned because clearly I think if the rupee depreciates, which it has quite significantly, then I think IT is definitely going to be one of the big beneficiaries because these are companies which are already sitting on a very strong balance sheet, a lot of cash on the books, and I think once visibility of order wins gets clearer, I think you could see companies like Infosys, TCS, the larger companies, or maybe HCL Tech. These are companies which we feel would be the first front runners. And of course, then we have, favorite choices with companies like KPIT, Persistent, which have also got decent exposures to the US market. But I think most importantly, obviously what Donald Trump's commentary is, because clearly US companies are on the lookout to increase their order books and this order win once the process starts. And I think you're going to see a lot of confidence coming back. As far as other sectors are concerned, I think, within the apart from the pharma sector, I think auto component exports are also one area where I think one should look at positively. There are many Indian companies which are exporting auto components in a big way, especially to US and Europe. So I think, with a depreciated rupee, they would also benefit. So I think, net companies which are not importing a very large percentage of their raw materials and exporting in a large way. I think those are the companies which I think will benefit because definitely this depreciation has come as an unexpected positive surprise. And I think you could possibly see that benefit rolling in the fourth quarter. Maybe in the third quarter, it may not get reflected in numbers. But fourth quarter, I think you could see some improvement in the profitability for such kind of companies.
Okay, got it. So we'll keep an eye out on the auto space as well there. Let's quickly look at one stock that I wanted to take your view before the pre-open sets in, and that's Swiggy. After having reported slightly higher losses on a year-on-year, on a sequential basis, but lower losses compared on a year-on-year basis, it's beat the revenue guidance as well. There is an expectation. Nuvama has come out with a report that the company may be profitable by end of 2025. What is your sense now that stock is above 500 odd levels? Do you see continuation of valuation comfort there?
No, I think see these kind of internet companies, futuristic companies, Sakshi. I would personally feel that we would require the company to generate positive cash flows, because I think
Yeah.
although the losses have narrowed down, I think 650 crores is still not a small number. So my sense is the narrative now for these companies is suddenly turned very positive. I think you're seeing that Zomato and Swiggy have turned everybody's attention, because a lot of urban as well as metro demand has now actually picked up quite significantly. In fact, for
Yes.
Zomato, Blinkit is also picking up. So I think longer term, over the next say 2 to 3 years, I think definitely it seems that this model is getting established. There's not very much competition, just two players in the market. So yes, I think somebody who wants to take a 2 to 3 year call and has a reasonably high risk appetite can definitely look at accumulating Swiggy in dips, because at this point of time it's very difficult to value these businesses without any positive operating EBITDA or positive operating cash flows. I think the market is just looking at the revenue growth and taking a multiple from there on. So I would suggest that somebody who's got a 2 to 3 year view can obviously accumulate. Definitely, I think at these levels maybe I may not be comfortable on the valuation, but yes, slightly if the stock corrects, I think one could definitely start chipping in, but with the long term perspective.
Right, ladies and gentlemen, a very volatile pre-open starts upon us. Wednesday, remember 3 days of rallies on the Nifty, 585 points have been added from the most recent low, and the Nifty is now at a 1 month high above all strong moving averages. Let us see what the prices are telling us. HDFC Bank in top form, fresh record high, 55 points up at 1881. HDFC Bank is the highest weighted counter in the Nifty, about 12.5%, and about 39% weightage in Nifty Bank. Let's proceed further. What is Reliance doing? Flat at 1323. How about Infosys? Down 24 rupees at 1872. How about ICICI Bank? In the green, 1309. These are the four top super index heavyweights as far as the Nifty is concerned. Where is strength? There it is in TCS, 35 points higher, 43.37. Now let's get into the FNO space and look at winners. You have Trent, 1.8% higher, 69.55. There is which is coming into M&M Finance, 4.2% higher, 297. And extreme strength in Oberoi Realty. Remember, today is the day when the Chief Minister for Maharashtra will be announced, and Oberoi Realty operates only in this exclusive Mumbai zone of real estate. Record high 2151, 4.4% high. Keep an eye out on this one. IEX, very strong numbers for November, 3.1% higher, 183.70. Look at defense counters. HAL up 2.4%. Look at strength, which is coming into KPIT Technologies, 1.7% higher. Sakshi marked Adani Ports, it's up again 2%, 1315. This is what is happening in FNO. Let's look at NSE 500, and you have Honasa, 4.7% higher after both promoters increased their stake following a very sharp beating of the stock over the last 1 month or so. What else is interesting? Cochin Shipyard, 3.2% higher. Garden Reach Shipbuilders, defense counter, 4% higher. And of course, I want to look at what BEL is doing. This is also one of those very good stocks that you need to keep in mind. BEL, 1.25% higher, 316. Ladies and gentlemen, we have a nice modest uptick on the Nifty, 4th day in a row. Let us see how it moves. But the call writers at 24,500 will be very, very active today. Good moves coming into the Adani counters as well. Avinash, is this pointing to risk on trade in the market?
Yeah, I think, Shail, my sense is that Adani stocks are extremely volatile. And I think, volatility will continue to be the order of the day for these companies. Although, the management has clearly stated that, they would not be requiring any funding, especially Adani Green. But I think, looking at the fact of the matter is that, such kind of volatility is only comfortable for those investors who have have a very high risk appetite. So I would say that within the Adani pack, we still continue to be positive on Adani ports because we feel that if India grows, infrastructure from ports is a very important element. And I think Adani ports should benefit significantly. The other companies, I believe that there could be a lot of volatility. But as far as Adani ports is concerned, I think it's got a well established business model, very strong cash flows, and a very strong positioning in the infrastructure, especially in the port market. So I think any dip in Adani ports should be used as an opportunity to accumulate. But yes, I think the other companies, I think we would be little skeptical. Hopefully, if there's no bad news, then I think you could see a upward trajectory. But otherwise, in Adani companies, the biggest issue is that investors are not aware what kind of negative surprises come at any point of time. So that becomes a big dampener for them.
Hmm. All right. Avinash, do also tell us, since you're talking about the infra story, cement space has again started to come back into focus. We've seen a lot of these players, start to perform yet again after this recent consolidation has played out. There are reports also that a lot of companies are also raising prices right there. Have you also heard something to the tune of price hikes coming across the board from the cement majors? And if yes, that's the case, favorites?
Yeah, I think cement as a sector should pick up. See, typically the second half for cement companies after the monsoon is supposed to be a much better period. I think the larger companies, which can't be ignored is obviously Ultratech. Then from south, I think we like Ramco Cements. Again, another MNC cement company, Heidelberg Cement. Our sense is that the supply crunch is is increasing. The pricing power is coming back, and maybe by December end or January we could see at least a 10 to 12 rupees cement price increase per bag. And I think if that happens, then you're going to see a robust fourth quarter. And typically, the fourth quarter is supposed to be a very strong quarter for cement companies. Government has been also pushing a lot of infrastructure projects. So cement is a basic building block. So I think typically this could be a good time to look at these companies because quarter three, my sense is going to be much better than quarter two. So I think Ultratech from the large cap space, Ramco Cements, and Heidelberg Cement. I think these are interesting companies which we feel could add a lot of value.
The market is going to trouble the 24,500 call writers, ladies and gentlemen, today. Brief flashes of brilliance coming above 24,500. The pre-open is settled. Let us see what HDFC Bank has in mind, and that will decide the fate of the rest of the market. Okay, in the green. What are the other banks doing? A bit of profit booking on Axis and ICICI. How about SBI? 1% higher. How about the entire PSU banking setup? Remember, it was the top performer yesterday. So we have 12 PSU banking stocks, and all 12 of them, ladies and gentlemen, are in the green, led by Indian Bank, led by PNB, led by Bank of India. Very strong. Interesting is the way the Nifty has settled in pre-open, 24,488, 31.6%. 31.6 points on the uptick. Your view on Tata Motors, Avinash, a stock that has seen a very strong bout of selling from 1150 all the way down to 780, now 810. Is the worst over?
Yeah, I think, Shail, I think the markets have been quite skeptical and, cautious. Obviously, after the management sounded that the commercial vehicle market has slowed down, and I think that has been a big dampener for the stock. I think the near-term trigger for Tata Motor stock would be the demerger proposal, the JLR business and the commercial vehicle business getting hived off. So I think, considering that, both the passenger commercial vehicle business, there is some volume kind of letdown. That has been the key reason markets have been quite skeptical and negative on the stock. But I think one needs to give in some more time for the stock. I think Definitely once the demerger is approved and the process starts, you could see a lot of action coming back again. So I think, around 800 odd levels, it looks as if most of the negatives are priced in. From a longer term, 750 to 800 would be a good range.
Okay, uh, got that. We are seeing a positive breadth across the sectors in the pre-open trade. Barring just a flattish trade on the auto space, I think rest all of the stock sectors are actually inching higher. Even the broader markets are actually also looking up. In fact, I wanted to discuss this also with you, Avinash, sir, and that's the mid and the small cap space with a kind of recovery that has actually taken shape over the last few weeks or so. You have towards mid and small caps? Are there any pockets that you're looking at particularly here for value buying? Is it completely stock specific even in the small and the mid caps? What is the approach that you are advising clients here?
No, I think within the small cap, mid cap companies, I think we need to look at sectors and companies, where the capacity utilization, the volume throughput is quite significant. And I think, pockets like real estate, pockets like auto components, pockets like defense ancillaries are opportunities which I think, investors should look at, because ultimately, if these frontline sectors do well, then the ancillary business is also going to do well. So my sense is, I think clearly, you have to give it a sectoral view. But I think within the small cap, mid cap, we find, many companies like Anant Raj from the real estate pack, typically Minda Corp from the auto component sector. Obviously, from the agrochemical side also, there are small companies, like Best Agro, typically something like the Sharda Crop Chem. I think these are opportunities which I think investors should look at, because clearly, enjoy a very large market cap. And I think the risk pretty solid if one looks at the next 12 to 15 months. I mean, the management commentary also has been pretty solid. So I think net, you've got to take a stock specific call, despite the fact that, the broader market has come down quite significantly. So there are opportunities provided your, time frame is at least 12 to 15 months going forward.
Got it. Okay, let's also welcome now Osho Krishnan, Senior Research Analyst, Technicals and Derivatives, Angel One, on the panel discussion now on the markets. Warm welcome. Good morning to you, Osho. Good to have you. Your own sense on first, the Nifty and the Nifty Bank. How are you expecting the day to progress within these two pockets? As far as the key stocks are also concerned, what would your top bets be for this day?
Very good morning, Shakti, Shalsa, and Avinash. Firstly, thank you for having me at the show. Well, now looking at seen in the last three trading sessions, our market has seen a very decent recovery from the lower zone of nearly 23,900. And now we are at a very strong make or break levels. For Nifty, 24,500 will be a very crucial zone, above which we can see the ongoing momentum of cycle of lower lows can be negated. So 24,500 will be very crucial for our market. And I'm expecting with the momentum going on, I can see that there can be a decent movement beyond it also in the coming period. So quite bullish in the market, but today will be a very crucial day for make or break kind of a movement in Nifty as well as Bank Nifty. For Bank Nifty also 52,800 is a stiff resistance, which is also the bearish gap on the daily time frame chart. So I expect if it surges beyond 52,800, then we can witness another set of good rally, decent rally in Bank Nifty. So these are the views on the indices. Now coming to the stock specific action, I have majorly there are various counters which are looking very positive to me now. But overall, basically the first counter which is looking very bullish is from the banking space, PNB. PNB is looking very positive. It has given a double bottom kind of a breakout in last trading session, hovering around the zone of, I guess, right now. So this is looking very positive to me. The bullish gap of 102 should be seen as a very strong support. So that should be kept as a stop loss in this counter. And in the coming period, we can see a target of nearly 118 to 120 in PNB. The other counter which is looking very positive is the Reliance. Reliance have seen a very strong movement from the zone of 1280, 1300 odd levels and have started gaining strong tractions also, which is from a very strong pivotal support zone. So I expect that on positional basis, one can definitely expect a decent move in the Reliance. 1360 is the immediate resistance, so that can be seen as a short-term target for traders, while 1300 can be seen as a stop loss. And one more counter which is looking positive to me. So basically three counters. The third one is Tata Communication. It has also seen a double bottom kind of a formation. Breakout is yet to happen, but overall the trend is looking at a bullish movement. So I expect Tata Communication is looking positive at current levels. 1775 should be seen as a stop loss, while 1860 should be seen as a short-term target.
Okay, Reliance, ladies and gentlemen, is in the same position as HDFC Bank was in a couple of months ago. Remember, Reliance is available much below 200-day DMA. This is something which is necessary for your long-term portfolios. I seldom stick my neck out, but on Reliance, probably I will. But also consult an independent financial advisor. Both HDFC and Reliance are in top form. That essentially means that the Nifty is in very good hands. Prices are upon us, ladies and gentlemen. A green start on the Nifty, 1 point higher. Bank Nifty 77 points higher. A bit of a red tick on Nifty IT. The 500 index, the Nifty 500 is opening strongly in the green, 44 points higher. This is the fourth day of gains. Now let's start with the big boys. Reliance is trading lower, 1320.3. HDFC Bank is 7 rupees higher, 5.65 rupees higher now at 1832. How about the other counters? Axis Bank, keep an eye out on this one. This is around 200-day DMA. It will also attract buyers. 2.85 rupees higher, 1163. How about Infosys? Profit booking, 13 rupees lower, 1878. TCS in the green, 8 rupees 25 higher, 4313. Let's look at ITC. Now in the green, ladies and gentlemen. Yesterday's debacle because of that recommendatory nature of GST hikes is now being absorbed into. I'll request Osho to keep an eye out on ITC. Almost 475, 2 rupees 50 higher. Let's look at defense counters. On the run, Garden Reach Shipbuilders 4.2% higher. Hindustan Aeronautics 2% higher. Cochin Shipyard 1% higher. BEL 2.2% higher. And how about Masdok 3.3% higher? All of them in top form. Government orders fresh buying of 22,800 crores worth of defense equipment across 3 defense companies. Okay, Honasa 3.4% higher, 270.5. PNB Housing 1.9% higher. Let's look at what are the other gainers as far as gains are concerned on the long side in volume. BEL will be in top form, 2.3% higher, 319.8. HAL 2% higher, Masgaon. These are the 3 top traded counters out of the 4, including HDFC Bank. Zomato 1.6% higher. Garden Reach is in thick trade, 6% higher, 1809. Coming to you first, Osho, on Garden Reach. What are the charts telling you? This is one stock that suffered a lot of selling pressure. Now some of that easing.
See, overall, we have seen a strong movement in this counter in the last trading week. The counter have reversed from the 200-day simple moving average, which was approximately around the zone of 1500. Last week, it has consolidated around the zone of 1700. And today, again, there has been a continuation in the higher trend. So definitely, there is a kind of a reversal that can be seen in this counter. Although technically, today will be an early day to say that the reversal has taken place or not. But if it confirms with a closure of above 1805, 1810, then from here onwards we can see a continuation of higher highs, higher lows formation for GRSC in the short term. So overall, the trend is looking to be turned around in this counter. There has been positive developments. The short-term moving averages are on the verge of giving a positive crossover. So all the technical parameters are on the verge of giving a bullish sentiments in this counter. I will wait for a day, or if it crosses above 1820 in intraday on a decisive manner, then today one can definitely start accumulating this counter for short to medium term time frame.
Okay, got that. Let's look at some other counters as well that are gaining further ground. Let's look at the broader markets. NTPC Green Energy is now 8.5% higher in trade, and that's buzzing sharply, 154.4 odd levels. That's the one that we keep an eye out on from the broader markets. Of course, Swiggy that we mentioned is now nearly 5% higher after that Q2 results impact is being seen. Reduction of losses giving that buoyancy to the stock right now. Along with this, we're also looking at Zomato pickup pace. Now it's at 284.8, 1.7% higher in trade as well. Let's also look at Honasa Consumer, something that we marked for our viewers as far as the stocks and news is concerned. Again, with the stake increase as far as the promoters are concerned, you can look at that 3.5% uptick that's coming back onto Honasa too. New age tech space definitely in focus. Let's also look at PB Fintech in the same breath then. To see how the company is now focusing on the healthcare division, and yes, about a 0.3% of an uptick for that one too. Let's get back to Avinash ji to understand within the entire new age basket, what is your order of preference in terms of the stocks that you're focused on? You did talk about how Swiggy is still a little on the uncomfortable zone, but what about the others across the board? Where are you keeping your bets now, continuing?
No, I think again from a longer term perspective, Sakshi, I think we continue to be more positive on Zomato. I think Zomato has got now a clear focus of profitability, and I think Blinkit is also expected to break even very soon. So I think my guess is that you have now comparable names, because earlier there was no direct peer-to-peer comparison for Zomato. So I think in terms of the positioning, Zomato is much better positioned in terms of the profitability, in terms of Blinkit getting break even very soon. My sense is that the other new age companies like PV Policy Fintech, PV Fintech, which is basically the insurance online insurance play, also could be an interesting bet, because you have been hearing a lot of news that there could be some relief given to the insurance sector in the coming budget. So I think that could be another interesting bet. I think the stock has obviously moved up, but looking at the next 2 to 3 years, this is a very unique opportunity, which I think could definitely give good rewards for investors who can have that kind of patience and conviction for a longer term. So these could be two interesting bets from our side.
9:21, ladies and gentlemen. Let's now take a detour in the broader markets. The Nifty is in the green, 22 points higher. IT index has also reversed for the better, back in the green. Let's look at the advanced decline ratio. Remember, for 4 consecutive sessions, it's in the green, and deeply so. 1,543 shares are in the green versus 600 in the red. Sakshi and I tracked 19 indices for you. Out of 19, 17 are in a shade of green, led by the Nifty Alpha 50, the Nifty Next 50. It essentially means mid caps are back in action. Look at the Nifty 100 mid cap, 0.2% higher, 0.3% higher. Small cap index is 0.2% higher. They have very, very strong advanced decline ratios. How about NSE 500? The 500 index has 300 shares in the green, 198 in the red. Let's look at some top performers in the volume space. I'm not surprised, but pleasantly very happy. NTPC Green is the top traded counter on the market today, 5% higher, 405 crores, followed by Mazdok, 2.8% higher, 48.29, Swiggy 3.3% higher. In fact, Sakshi, what's really, really interesting is that the first 10 stocks on top traded are actually in the green. This is a rare occurrence, and out of those 10 top traded, there is only HDFC Bank, which is HDFC Bank and BEL, which are in the Nifty. The rest of them are all cash counters. Okay, Dixon is also now F&O, but look at Ola, back in 3 digits, 101.3, 2.8% higher. Dixon, again fresh record high. Swiggy, you've just talked about, 3.4% higher. HAL, BEL, Mazdok. This is a fresh start on the defense space. Let's get Osho on the conversation. Osho, apart from Garden Reach, what are the charts for HAL and BEL telling you?
See, both the counters are looking very positive. Overall, HAL has seen a very strong traction once it surpasses the zone of the cluster of its moving average, approximately the zone of 4420 odd levels on the daily time frame chart. And from there onwards, I expect that there can be a continuation of the higher trend in HAL. So the technical outlook for HAL looks very promising. I expect that in the coming period, one by one, not very aggressive, but gradually it can reach towards the zone of 4,800 on intermediate basis, followed by 5,000 on a short-term perspective. So this is looking very positive, and gradually one can definitely accumulate this for a slower or a healthy returns in the coming period. Now coming to BEL again have seen a very strong breakout around the zone of 300, and since there the counter has been into an strong up trajectory, so I expect that there can be a continuation till the zone of 330 335, because that is the immediate resistance that can be seen in this counter. Overall, now 300 should be the zone where strong cushioning should can be seen in this counter, while on the higher end 335 is the target. So one should definitely try to accumulate it, or even if it in future, if it sees some booking towards the zone of 308 or 7, that should also augur very well for the buyers. For short term, immediate target comes around 335.
Okay, got it. So that's the defense space. You know what else is picking up pace is the insurance basket as well. Let's get Avinashi into the conversation. As far as the insurance space particularly is concerned, you did talk about PB Fintech. How are you really assessing the larger players, SBI Life, HDFC Life, LIC for that instance as well? There's been a lot of regulatory challenges that these companies are facing as of now, and the eyes are out on as to how the act will be brought about as well within the space, and if there are any amendments that are to be coming in too. So how are the insurance players looking to you at this point in time? Should one really stay away till the time there is greater clarity as to how things will progress? This has been a volatile space of late. Your sense?
Yeah, I think I think most of these companies are priced to perfection, and I think the big part of the business comes in the January to March quarter. So I think one good part is that business has picked up. The penetration rates for India are a big kind of a opportunity for almost all the players. But I think within that, I think something like an SBI Life or maybe an ICICI Pru, we are positive on the private sector companies. LIC still does not have the kind of high realizations for their policies. Typically, if you look at HDFC Life, if you look at ICICI Pru or SBI Life, I think these are companies which are more profitable. So I think clearly, if one were to take the next say 2-3 years, I think insurance is a space which is very interesting. I think hopefully something positive if comes out in the current budget would possibly be a kind of a positive sentiment driver for these companies. But you must remember that these are companies where one can't evaluate them on a quarter to quarter basis. So I think you'll have to take a slightly longer term call, at least 12 to 18 months. And I think within that, we personally feel the private sector companies have got a better opportunity. So, I think HDFC Life or for that reason ICICI Pru would be our top bets, and of course SBI Life from the PSU space.
Okay. What is back in fashion, ladies and gentlemen, is the entire PSU basket, and Nifty is gathering strength. Let's first analyze the top gainers in the Nifty to see whether 24,500 will be taken out. Okay. The big boys are back in action. Infosys is contributing 15 points. HDFC Bank is contributing 8 points. ITC is contributing 7 points. L&T and TCS about 6 and 5 points respectively. What is pulling the Nifty down? ICICI Bank and Reliance respectively 8 and 5 points. Now if 24,500 is taken out, then you will see a lot of call unwinding happening at this level, and of course that will again give a fillip to the index on the long side. So this is turning out to be a great day. Let the first 15 minutes lapse, and then we look at the 24,500 call on the long side. Remember, for the last 3 sessions we are tracking 24,300, 24,400, and we will now be looking at 24,500. The strength on the Nifty is visible and palpable. Let's look at the advanced decline on the Nifty. 33 stocks in the green versus 16 in the red. Let's wait for the first 5-10 minutes, but for the moment it's a nice breakout that is happening. Let us see how it goes. Sakshi, what are you observing?
Well, Shail, it's clearly the railway space that's defense majors that are pulling up now. Jupiter Wagons is up now 4%, something that we've closely tracked when the railway space was in the theme. We are also looking at Titagarh Rail now up 3%. You have stocks like even Ircon International, up and about. Railtel is also buzzing in trade right there. Let's get Osho to talk about these railway related stocks right there. Osho, along with the defense players, are you also keeping a keen eye out on the railway pack? Any key stocks?
See, again, in the railway space, the counter has seen a decent recovery from the lower zone, but again, it is hovering below the previous low. So I will be expecting that in the coming period, once there will be a sloping trend line breakout in majority of the counters, as you have named some of them, as Jupiter Wagon is also looking very positive to me, but I will be waiting for another day of buying traction in this counter. It is hovering at a very crucial zone of 200-day simple moving average around the zone of 510. So if there will be a continuation of a higher closer or a buying interest in this counter, then it will definitely attract buyers from here onwards. It is at a very strong sloping trend line breakout. So I will be expecting that above 512, closer above 512 can boost a strong momentum in this counter in the coming period for immediate upside target of nearly 560. So approximately all the counters from the railway space are approximately hovering near to the very strong resilience zone, either the sloping trend line or the 200-day simple moving average. So once there will be a one or two consecutive days of buying emergence in these counters, then there can be a bullish sentiment that the traction of bullish sentiments will be back in these counters. So obviously these are into the watch list, but as of now, I'll be waiting for 1 to 2 more trading sessions.
Okay, got that. So that's as far as the railway space is concerned. Let's also get you to talk about the other space, and that's the power-related stocks too. Stocks like PFC and REC that are garnering more strength within the Nifty Next 50 now, up 3% each. What's the buzz here? Do you think this momentum will continue? Should one really look at these two stocks? Over the last 2-3 weeks, they have been showing some amount of bounce returning. Are they poised for higher highs now?
See, both the counters have seen a very decent consolidation near the zone of 200, a simple moving average, and now has emerged above the cluster of higher moving averages. So I expect that in the coming period, there can be a decent movement in both the counters, although both moves in the same tandem, but technically REC is looking more lucrative from risk reward point of view. It is hovering around the zone of 550, while very strong support is placed around the zone of nearly 525 to 528 zone. So that is a very strong support for this counter. While on the higher end, I am expecting with the kind of momentum and breakout it has given, I expect a target of nearly 590 to 600 in REC Limited. And similarly, PFC will be having the same kind of a pattern. But overall, this counter has seen a decent traction. It has given a breakout above the zone of 480 and is now at 515. So from here onwards also, there is a probability of it to move higher, but on the technical charts, 545 to 50 is the resistance zone for this counter, while on the lower end, approximately the bullish gap, which is around the zone of 480, that should be auguring well for the buyers to cushion any kind of blips in the coming future.
Right. Osho, we've talked about these two power finances, but even in the F&O space, it's CESC that's pulled up strongly in trade today. It's 8% higher in trade. Since we're talking about this entire power theme, what's the buzz here on CESC?
See, overall, this counter have seen a strong breakout in last trading session. A sloping trendline breakout was seen in CESC that was backed by very strong volume. So I expect that from now there can be a decent up movement or the possibility of trend reversal can be seen in this counter. Immediately 190 to 194 is the first or immediate resistance for the counter. The time it surpasses the same, then there will be a gradual up move, not very much aggressive on the target, but I expect 192 followed by 200 is the target for short-term perspective, very short-term perspective. And once it reaches the zone of 200, then again another 8 to 10 points of rally can be seen. So overall, there is a trend reversal that can be seen. One has to accumulate the counter and keep trailing their profits with a higher stop loss.
Understood that. Well, small caps have picked up pace, viewers. About 0.8% higher in trade is the top moving sector. Along with this, IT space is garnering more traction now. Let's look at the IT pack. In fact, this is supporting the markets to move up higher. Now, the Nifty is up by 80 odd points. So remember, it's the Nifty IT that's definitely one of those pockets that is supporting the sentiments. Tech Mahindra is up 1.3%. Wipro, L&T Technology Services, Emphasis, and even the large caps, TCS, Infosys, LTMI, HCL Tech, they're also garnering more pace. What looks good within the IT pack to you, Osho?
From IT space, major of the counts are looking very positive, but they are at a very higher zone. So expected that overall the market have started seeing a bullish stance. So IT space can see some kind of uh, leftover from here onwards, but overall the trajectory for IT counters are looking very positive. Still, the are looking positive to me. I expect that there can be a decent move in Infosys in the coming period. It is having a very stiff resistance around 1930. So for short term, definitely 20-25 points of rally can be seen, but 1930-35 is the zone beyond which one can expect the rally to continue. So I expect majority of the IT counters are hovering near to the breakout zone or a nearby resistance. So anytime they give a breakout, we can witness a decisive up move. So stature is very positive. They are just hovering in a very broader range of consolidation where dips are arguing very well for the buyers and higher resistance are arguing very well for the sellers or for booking their profits. So 1935 is the zone where one should try to book profits, and near to 1880 and 1890 is a support zone for Infosys.
Right, ladies and gentlemen, 9:35. We are in top shape. Market is consolidating above 24,500 in the first 20 odd minutes of trade, which essentially means that the bears will be on back foot because now the unwinding of 24,500 call will happen. Also remember, there are no weekly expiries, which means that bulls have a clear run till December 26th. Essentially what I'm trying to say is that you will see less volatile trade, more aggressive postures on the long and the short side, but for the moment it's a nice long trade in the works. Oberoi Realty, fresh record high, 3% higher, 2120. Let's look at some more breakouts that are happening. CDSL 1681, fresh high. CAMS, fresh high, 0.5% higher, 5144. Persistent, again a fresh high. Oracle Financial Services, record high. You have eClerks, 1.8% higher, fresh high. Volume buzzers, let's look at some names. So what would I like to mark? Again, HEG. Coming to you, Osho. HEG and graphite, both of them up. These are steel sector ancillaries. What are the charts telling you?
For both the counters, there has been a decent movement in the last two trading sessions. Especially HEG has given a strong breakout above the zone of 450, but I think people would have missed the chance because there has been a very strong and stellar rally in this counter. But overall, it is now on the verge of giving a fresh breakout on the daily time frame. Approximately 512 to 514, where it is hovering just now, is a resistance zone for this counter. The time it sees or breaches the zone of 514 on a decisive manner or on a closing manner, we can see a decent movement in this counter in the coming period. But again, saying it has already surged approximately 16%, one has to maintain their staggered manner of accumulation in this counter. Overall, the trajectory is very positive, but do not be very much aggressive accumulating this counter at higher levels. There can be a staggered manner of accumulation around these levels and around the zone of 490 for higher target of nearly 560 to 580 in the short term period.
Okay, got that. IT is further garnering pace. It's now 1% higher in trade, the Nifty IT index. So keep an eye out on across the board IT space. Infosys, TCS, HCL Tech are contributing largely to this strong move within the Nifty IT and also on the Nifty as well. Along with this, we are seeing across the board, stocks like Wipro now gaining more pace, 1.5% higher, and even the mid caps that are doing very well. So don't forget to keep an eye out on the IT pack for today. Apart from the IT space, what else? PSU banks, the likes of say Bank of India, UCO, PSB, these second-rung PSU banks are now actually garnering some more traction. Do you think this will have the strength to continue the move here? Would you have the confidence of moving, fresh money beyond, say, an SBI or a PNB or a Bank of Baroda, even to the second-rung PSU banks at this stage?
See, overall, there has been a very decent traction in all the major of the PSU sector banks. As you have mentioned, some of the counters like Bank of India, State Bank, and PNB definitely is looking very positive. But Bank of India and other counters from the PSU sector have also started gaining a strong traction. So technically, yes, there is a kind of a decent bullish trend reversal can be seen in these counters. And on the higher end, there is a possibility for these counters to gain a decent bit of ground. For example, for Bank of India, approximately 122 to 125 is the immediate target that can be seen on the technical chart. So at these levels also, one can definitely accumulate. I'm not very much convinced on a broader term time frame, but for short term, definitely there is a potential for higher reach in these counters. For 125 is the immediate resistance, and even if surpasses the zone of 125, then we can see a decent rally in the coming period. But on the technical front, I will be more focusing on the State Bank of India and PNB. Both these counters have seen a very strong traction, and PNB has given a very strong breakout also. So I will be expecting a decent move in this counter in the coming period. So PNB and SBI both are looking very positive, and one should stay focused for investment or trading purpose in these counters.
चलिए 940 so far so good 82 points higher on the Nifty bank is better, my apologies, the Nifty 500 is better, 100-point uptick on Nifty 500, 23,129, and what's clicking today is a very strong move on the PSU basket. Let me just again highlight what's happening here. A lot of favorites are coming back. Sakshi, when was the last time we marked Midhani, Mishra Dhatu? I can't remember. Must be 6 months earlier. 5.7% higher, 389. Dredging Corp, 4.5% higher, followed by two top performers, Garden Reach and BDL, 4 and 3% higher from the defense space. Banks are in top form. UCO, Bank of India, IDBI 2.8% higher, and hold your breath, Sakshi. IREDA is now 2.5% higher, 211. I also want to see what HUDCO is doing. I can't see it on the screen as far as prices are concerned. GHU, 1.5% higher HUDCO, 238. So please keep an eye out on the entire PSU banking setup. Very strong moves coming in, and as I have said, the risk on trade is back, and back how? Canara Bank 106.56, 1.7% higher. Indian Bank, it's repeatedly coming in front of me. Very strong moves as far as markets are concerned. Auto ancillary, something that was highlighted by our friend Avinash just a moment ago. Strong moves on CEAT, 3.5% higher. You have Sandhar Technologies, 2.4% higher, 575. A strong move coming in Exide Industries, 1.4% higher. Please keep an eye out on all these counters. Tires are doing good. Goodyear, JNK Tire, and of course CEAT that I have marked. MRF we don't track because the price digit is so high. But all told, Sakshi, a very nice first 20-25 minutes of trade, and now only there is this one index which is down, Pharma index 0.2% lower. This will also improve for the better. But IT leading the charge, 1% higher. Small caps, mid caps all in top shape, and the broader indices NSE 500, 200 and 100 are gaining ground. Advanced decline is better still, now 1808 shares in the green versus 431. Sakshi.
Right, within the broader markets, you're also looking at one of the recently listed stocks, Niva Bupa Health Insurance, garner a lot of strength today, 14% higher in trade. It's the buzzing stock that we can keep an eye out on for today right here. After the listing, it was lying low, but today there's a very strong move that's come in on Niva Bupa. Honasa continues to be in top form, about 8% higher after that stake increase news has come in. From the promoters, and let's also look at some of the other stocks that are buzzing within the broader markets. Of course, NTPC Green we have marked, with the kind of move that we are seeing again within the recently listed stock space. Wonderla Holidays is up by 7.7% as well. Newgen Software is up by 8.8% higher in trade as well. So those are some of the stocks that are actually buzzing in trade. In the broader markets particularly. Within the other spaces that need to be marked as far as attention is concerned, PSU banks as have been marked 1.3% higher, is moving up pretty sharply. IT is up by over 1%. Small caps are now up 0.7% in trade. You have the financial services that are doing very well. Even the mid caps are doing well at this point in time. Almost 0.5% of an uptick can be seen, and of course this is largely driven by the banks right there within the space, and of course some of the defense name stocks that are doing well. Consumer durables is also up by about 0.5%. This is a space that we haven't discussed. Let's pull up some of the stocks right there with Osho to be discussed here. Of course, Dixon and Keynes, we do know they have been the flavor of this week entirely. Both of them have been garnering a lot of strength right there. Meanwhile, viewers, keep an eye out on the Nifty too. It's 100 points higher now. 24,557 is with us on the Nifty. What is looking promising with the consumer durable space? Do you think after consolidation, stocks like Voltas, Havells, they are also coming back in top form? Maybe even the wires and the cables kind of stocks as well, along with the EMS plays like we have discussed, Dixon and Keynes. Where would you keep your preference even now?
See, overall, there has been a decent movement in major of the consumption-based counters. For example, as you mentioned, Havells have seen a decent movement in the last few trading sessions or last few trading weeks. Once it breaches the zone of 1680, 1690, from there onwards, it has been on a continuous higher trend. So this can be seen as an opportunity to accumulate this counter. There has been two positive developments that can be seen. One, that it has emerged above the short-term moving average, and the other one is there has been a very strong positive divergence on the technical parameters. So both are looking has added very bullish quotient to this counter, and I expect that in the coming period, these counters can see some kind of decent movement or a very strong movement also once there will be a higher convictions with the higher closer. The other counter which is looking good is Finolex Cable. Finolex Cable have seen a sloping trend line or a channel breakout in last three trading session and have started gaining some traction, although the volumes are not very strong as of now, but there has been an initial signal of a reversal in this counter. The time it breaches the zone of 1200 on a decisive manner, there can be a decent movement in Finolex Cables also. So one should definitely keep these counters in their watch list. The time we have a very strong or decisive breakout, one can definitely try to accumulate for a very strong returns in a short-term time frame.
Ladies and gentlemen, for the moment, 24,550 is adding as a tough resistance, but what is moving? And it's HDFC Bank, 1842, about a percentage point higher. That's a very, very big plus that the market has. You have 91 points on the Nifty, 24,587. Apart from that, strong moves in the cash markets are coming into banks and banks alone. Indian Bank 3.4% higher, 599.75. Bank of India 117, 3.6% higher. Oberoi Realty 3% higher. Deepak Nitrite 2.4% higher. IRFC, Sakshi, when was the last time we marked IRFC? Can't remember. 151, 2.9% higher. So the government financing arms, IREDA for renewables, HUDCO for housing, and IRFC for railways. All three of them were super high beta counters. They are again coming back into life, into action. Zomato 1.8% higher, 285. You have Manappuram Finance ticking 2% higher, 167.40. Remember, I was marking it at 135, saying that this is something that will bounce back. What is in pain? It's Adani Green, Aurobindo Pharma, Adani Total, Colgate Palmolive, ACC, all of them showing losses of between 1 and 2.6%. Enough for the first 30 minutes of trade. Markets in great shape. Osho, what are you watching? What looks good?
From here onwards, there are various counter which are looking very positive. For firstly, Canara Bank is looking very positive to me. It has given a very strong movement in today's trading session also, and it is expected to continue its higher trend. So I will be expecting that from here onwards, near to 110, 112, which is the 200-day simple moving average, can be seen as the immediate target for Canara Bank. So this is a counter which one should definitely keep an eye on. The second one is Coromandel. Coromandel again have given a very strong movement. There has been some kind of consolidation around the zone of 1800, and today it has started gaining traction above 1800. So I expect that for short-term traders, one can definitely try to accumulate it. 1840, 45 should be the immediate target, while 1770 should be seen as a stop loss in this counter. So majority of the counters are looking very positive. From power sector, CG Power is looking very good. It has given a consolidation breakout today, so I expect that there can be a continuation to higher trend in this counter. Approximately 785 to 790 should be the zone where one should try to book their profits in CG Power.
Okay, got that. Let's look at what else is buzzing in trades then. Some of the NBFCs also that are garnering some strength. So let's look at that also, Osho. We have PNB Housing Finance up 3.4%, Manappuram Finance up 1.5%. So up IFL Finance, some of the brokering houses names that have been continuously doing well too. Repco Home Finance is doing well as well. Spandana Spurti. Across the board within the NBFC space, are there any preferred stocks that you believe can continue the strength?
See, overall, as of now, there has been not very convincing move in major of the financial or the NBFC counters. But comparatively, if I have to say, then M&M Finance is looking positive to me. It has given a very strong consolidation breakout in last trading session. And today also there has been a continued buying in this counter. So I expect that in the coming period, there can be a decent movement that can be seen in this counter towards the target of nearly 295 to 300 in the short term period. The positive observation is that it has emerged above the 200-day simple moving average after a long period. So I expect that there can be a decent continuation to this counter. But overall, majority of the counters are still on a verge of giving a fresh breakout or on a verge of a resistance. So I will be expecting that one should wait for nearly 1-2 trading session to have a conviction in these counters.
Okay, got that. Right, let's look at some of the other pockets then. Where else can we really look at for value and for a discussion in the markets now? Within the Nifty, okay, so there is this interesting space that's also garnering more strength, and that's the QSR space, especially stocks like Varun Beverages that are also buzzing continuously over the last many sessions now. Osho, what looks good within the QSR space? Have you looked at recently stocks like Varun Beverages or maybe a Jubilant Foodworks, the others as well which are in this space, maybe a Devyani International, Sapphire Foods, Restaurant Brands Asia? These stocks have started to move up after a long haul. Your sense of what looks good, would you stick with Varun Beverages or do you see other stocks also gaining strength?
See, some of the counters have started gaining traction. Even Varun Beverages have seen some kind of traction, but comparatively, Jubilant Food looks much better on the technical front because it has been into a higher zone and it has been maintaining the higher stature above all the exponential moving average. And there has been some kind of consolidation in this counter near the zone of 650. So I expect that the time it breaches the zone, or there can be a strong traction in terms of volume that can be seen in this counter, there is a possibility for this counter to move towards the zone of 700. while Varun Beverages is again looking very positive, but it is having a very broader stature of consolidation. On the higher end, approximately 630-35 is the zone as a resistance, while 590, which was the last low, that is a very strong support for this counter. So I expect that once it breaches the zone of this consolidation, there can be a continuation in this counter. So overall, this space is also looking very positive, but one should again wait for a buying or wait for a breakout for accumulating these counters. So I will again suggest to wait for 1-2 trading session. I'm being just conservative in the market as
Sure.
we are on a verge of having a make or break kind of a zone. Although I expect that the breakout has been already taken place, but still one should stay conservative as we have headed for a very strong resistance in the market. So that is the approach. That's why I am saying that one should wait for 1-2 trading sessions. Else on the technical front, there has been an early sign of reversal in majority of the counters. So for VBL also, Varun Beverages also, near about 630-35 is the resistance zone, breaching which again it can move towards the zone of 675 to 80 in the coming period.
Okay, got that. Okay, last word from you then, Osho, on the markets, particularly 106 points higher now as far as the Nifty is concerned, 24,564. What goes next? Would you stick with the Nifty or the Nifty Bank for today?
See, overall, there is a very strong movement in Nifty in today's trading session. The 24,500 mark has been strongly moved out from the opening bell. So I expect that there can be a higher possibility of it reaching towards the zone of 24,800 on a short-term perspective. Also, after 31 trading session, the counter have emerged above all the moving averages, all the significant moving averages. So that's a very positive development for the Nifty index. So I expect with the kind of momentum that we are witnessing in the first 1 hour, I expect that there can be a strong breakout in the coming period. 24,800 should be the immediate target for Nifty. Once it breaches the same, then again 2,500 will be the next zone where one should eye for. While Bank Nifty, again, it has also given a breakout of 52,800. So definitely a very strong momentum. And I mostly am finding counters from the banking space now. So Canara Bank, PNB, SBI, all the PSU counters are looking very positive to me. So more aggressive on banking space. Approximately, I am expecting a target of nearly 53,500 to 600 in the short term. Maybe by today or by tomorrow, I am expecting the target 53,500 or 600 in bank Nifty. So overall, the market have started gaining a strong traction, and there can be a decent move in majority of the counters in the market.
Right, ladies and gentlemen, 9:56. It's been a wonderful 35 minutes of trade. The Nifty is negotiating now 24,550 between the bears and the bulls. Most likely, you will see 24,550 being taken out by bulls, and today's close should be above 24,500. That will be a major support for the bulls. As I have said in the morning commentary, FIIs have decreased their net shorts on index contracts. That's a very big positive. They are buying aggressively in the cash market. HDFC Bank, which is the bellwether for the Nifty and the Bank Nifty, highest weighted in both indices, is at a record high and is in charge of this rally. What else is buzzing? Well, across the board, it's the PSU pack that is making a very strong comeback. Look at HUDCO, now 240, 1.2% higher. Look at IREDA, look at IRFC, look at the entire defense space. All of them are now buzzing with gains. Sakshi.
All right, we'll start to wrap up the markets and the morning trade as well. Thank you so much, Osho, for sparing your time with us in the morning and sharing with us and our viewers all those insights on the markets and various stocks that we've discussed. Appreciate your time. Thank you so much. 24,550 right now on the Nifty, viewers, about 0.4% of an uptick as far as the Nifty is concerned. We've had a good first 45 minutes of trade in the markets. Let's see if this continues as well. Across the board, there were gains that definitely were appreciated across PSU banks, the IT pack, and then you had the broader markets, financial services, and now the real estate space is also picking up pace in trade. Broader markets doing well. Autos and pharmas, however, have slipped into the red, but rest of the pockets look positive. Now, when we look at the PSU names, that was where the action remained across the board within the defense names, the railway names, even the power financiers, the power names as well. Oil and gas also threw in sub names that were interesting to look at. So Oil India is now picking up pace, 2.3% up. You have IRFC, Power Finance Corporation, GAIL, REC, NTPC, BPCL. So these are the kind of pockets that are doing well. Among the Nifty, the top movers include names within the insurance pack. HDFC and SBI Life are the both top movers with over 2% gains. Wipro from the IT pack, NTPC, then you have TCS, BPCL and BEL as among the top winners. But on the downside, you have Cipla that's now underperforming, 1.1% up, no down. Bharti Airtel, Dr. Reddy's, Maruti, Reliance Industries has slipped about 0.4% in trade. So that's where the pressure is building up, and perhaps the gains are getting capped. Eicher Motors, Shriram Finance and Adani Enterprises are some of the other stocks that are in the lower trade. In the F&O space, you have CESE, Balkrishna Industries, Indian Bank, Cyient, even KEI Industries and Oberoi Realty as the top movers. On the lower side, as far as the F&O action is concerned, Adani Green has now slipped after those 4-5 days of consecutive gains, coming in 2.7% lower. Adani Total Gas, so some profits being taken off the Adani Group stocks. Even ACC is down in the F&O space as well. So keep an eye out on the Adani stocks as well. And across the board, we do see that the momentum is building up strong. Let's hope that it continues. With that, we wrap up this morning edition of Market Today. Thanks from both Shail and me. But do stay tuned. There's a lot more to be tracked throughout the course of the day. And we will be coming back with top market masters for you to get a sense of how should you be investing in this current market setup.
Be sexy. Well, that's not just a motto for life, that's also the name of the car I'll be driving. Welcome to the future with Mahindra's new Born Electric. Not a concept, the car's here, and this is your first look on the show. The new Mahindra Born Electric B60. What's it like to drive? Is it a spaceship? Is it from the future? Does it pass the tech check? All that and a lot more on this special episode. Join me on the inside.